Has the era of the dollar as the leading global currency come to an end? On August 5th, the U.S. stock market suffered a staggering $2 trillion loss, impacting not only the U.S. but also causing significant losses for investors worldwide. This sharp decline has led many to rethink their investments in the dollar. It seems that 2024 might be a year of decline for the dollar, with experts predicting an imminent recession. Compounding this uncertainty, the BRICS nations are actively working to undermine the dollar's dominance in global trade. As these developments unfold, the crucial question is whether the dollar can withstand these pressures, or if we're witnessing the start of its decline. On August 5th, 2024, the U.S. stock market experienced unprecedented turbulence. Within the first hour of trading, over $2 trillion in market value was lost, leaving investors and analysts worldwide scrambling to understand the causes and implications of this drastic downturn. This crash, coupled with economic developments, created a perfect storm of financial instability, further aggravated by BRICS' efforts to challenge dollar dominance. The immediate cause of the crash can be linked to growing concerns about an impending economic slowdown in the U.S., heightened by disappointing job data released just days earlier, which showed lower-than-expected employment growth. The Federal Reserve's decision to keep interest rates at a 23-year high further undermined investor confidence. While high interest rates aim to combat inflation, they also increase borrowing costs for businesses and consumers, leading to reduced spending and investment and stifling economic growth. As fears of a recession grew, panic spread through global markets, resulting in massive stock sell-offs. The impact was swift and severe. The Dow Jones Industrial Average fell over 1,000 points, while the S&P 500 and Nasdaq Composite dropped by 4.25% and 6%, respectively. The volume of trades triggered automatic trading halts, but these measures were insufficient to stop the selling. The global repercussions of this crash were significant, as the interconnected nature of today's financial systems meant that a major event in one economy could ripple worldwide. Japan's stock market was heavily affected, with the Nikkei 225 index plummeting by 12%, its largest single-day decline since 1987. Taiwan's stock market also experienced its worst loss since 1967, driven by fears of a U.S. recession impacting its export-dependent economy. The global sell-off was not limited to Japan and Taiwan. Markets across Europe and Asia saw sharp declines as well. The widespread panic was due to the perception of the U.S. as a bellwether for global economic health. When the U.S. economy falters, it raises concerns about global economic stability, prompting investors to pull back from riskier assets. Additionally, the U.S. dollar, once a cornerstone of global economic stability, is now facing intense scrutiny. The BRICS countries, Brazil, Russia, India, China, and South Africa, are pushing to reduce their reliance on the dollar, advocating for alternative financial systems. Their efforts include promoting local currencies in trade, developing new payment systems, and creating a BRICS currency. China, in particular, has been leading this movement, using its growing economic influence to promote the yuan in international trade. The recent U.S. stock market crash has strengthened China's argument for reducing dependence on a single currency tied to an economy in turmoil. The BRICS nations are challenging the dominance of Western financial institutions by launching initiatives like the New Development Bank and the Contingent Reserve Arrangement. These efforts aim to offer alternatives to the World Bank and IMF, reducing reliance on Western financial systems. The BRICS group is also pushing for currency diversification, advocating for the use of local currencies in trade to lessen dependence on the U.S. dollar and promoting a more multipolar currency system. Additionally, BRICS countries are expanding their influence in global trade, developing new payment systems to bypass Western-dominated systems, and considering expanding their membership to enhance their geopolitical and economic reach. Overall, BRICS is working towards a more balanced global order that reflects 21st-century economic realities and is gradually reshaping the global financial architecture. The crash of the U.S. stock market on August 5, 2024, underscored significant economic challenges and global repercussions. With over $2 trillion lost in the first hour of trading, this event has highlighted vulnerabilities in the U.S. economy and the stability of the U.S. dollar. The crisis has deeply impacted global markets, with countries like Japan and Taiwan facing severe losses. The pressure on the US dollar has been intensified by BRICS' efforts to reduce dependence on it and promote alternative financial systems. This crisis may accelerate the shift toward these alternatives as more countries consider diversifying their currency reserves and adopting new payment systems. Although the Federal Reserve is expected to respond with interest rate cuts, these measures might be too late to prevent a deeper economic downer. The broader geopolitical and economic uncertainties, including trade tensions and conflicts, further complicate the situation. Is this the official decline of the dollar? The question has gained relevance in light of recent economic developments. The decline of the dollar was noticeable even before the recent stock market downer. It became particularly evident in July 2024 when the dollar fell against major global currencies. The DXY index, which measures the dollar's strength against a basket of currencies, dropped by 1.7% that month. Specifically, the dollar weakened from 1.1717 to 1.1820 against the euro, and from 1.1684 to 1.1546 against the Japanese yen. These movements suggest a weakening of the dollar's purchasing power globally. Despite signs of resilience in the U.S. economy throughout 2023, a combination of factors is contributing to the dollar's weakening position. Key issues include a negative savings rate in the U.S., indicating that consumers are increasingly relying on credit and depleting their savings to maintain their spending. There are also indications of an impending economic slowdown, driven by tighter monetary policies by the Federal Reserve to combat inflation, as well as external pressures like geopolitical tensions and shifts in global trade dynamics. Together, these factors suggest that a recession in 2024 is becoming more likely. What do you think? Will BRICS find more ways to challenge the dollar successfully? Could they introduce their currency as the new global standard? Share your thoughts in the comments section. If you want to see more videos like this, subscribe to our channel and hit the bell icon for notifications. We're focusing on topics often overlooked, such as African politics, economy, and rising power. Thanks for watching, and stay tuned for more content. Like, share, and subscribe to support our channel Ancient Stormixed, and stay updated on our latest African videos.